Vincenzo's Go Crypto Investing, this live lunchtime update here on February the 3rd, 2026. And we're going to get into what we're looking at in the charts a little bit at the top of the noon hour with the gold standard market warning. Read carefully. Go to my Facebook page, Vincenzo's Go Crypto Investing, the #1 retail investing Facebook cryptocurrency and stock market page out there to give the retail trader the information and the knowledge they need. Don't be tricked again. Sharp pullback equals fear. Sudden bounce equals hope. Retail chase liquidity provided. Capitulation leg down follows. And I believe that's where we're at now. Remember, I warned March of 2025 when the bear market began. And that's the reason you guys need to be over at Vincenzo's Go Crypto Investing, the YouTube page. And if we take a look at the XRP price right now, a significant level that we're watching in the XRP price is the 200-day moving average, not in the daily time frame, but in the weekly time frame. Most people don't look in the weekly and monthly time frame, and that's sitting just above where the price bounced. What is a prototypical textbook market bounce, sitting there just above a critical support level at the 200-day and the weekly. You can see the $1.93 technical level in the daily time frame is sitting above the price, which the daily time frame 50-day in red and 100-day in blue is sitting just below the 50-day moving average in the weekly time frame, which is sitting at about $2.21 ish, somewhere right around there, $2.18. And this is what we're watching now. Do we have a bounce back up near the daily time frame moving average at $1.93, which would be a technical trading rule? And this is a free technical trading rule given to you by old Vincenzo. You usually bounce almost to where you're going to come at support. If you scrolled back, and I had the ability right now to scroll back farther, you would see this when it came down to the horizontal red line. Before it broke it, it had a bounce back up and a fake out back to the upside. That's what you would expect right now in the XRP, as we're trying to have a pull back and a brief bounce from just above the 200-day moving average in the weekly time frame, a strong long-term macro time frame target and support level at $1.42. So we're watching, and that's what we talked about in the live drive time radio show yesterday. Every morning, 6:45 for about 15 minutes, we do market analysis on what's going to go on. And we talked about a pullback to the upside, which was to be expected. And it's attempting to have a pullback to the upside, but it's currently being thwarted and it's trading sideways as of last night and this morning and today. And we'll see if it can't try to pull back up. But that's the next critical short-term trading level that you and XRP need to be following, is the $1.42 will eventually be hit. And I believe we're going to break $1.42 in XRP. And the gold standard's been consistent that we're in a deep, dark midst of a bear market, and I believe we're going to break down to $1 after we break the $1.42. But in the short term, there could still be a nice pullback near the $1.93 to potentially a 209 level in the immediate, very short term. And for all of you people on here that are scrolling on and off, go to my Facebook page, Vincenzo's Go Crypto Investing. You get up-to-date live information that you need. And it was built for the retail trader and investor. Vincenzo's Go Crypto Investing. It's the top retail trader and investing equity and stock market page for the retail trader. If we're looking at the XLM price, it's the same thing with the XLM price. We've broken down, and we've broken down big since we hit the 63-cent top last year in March, or in December of 2025, going into January and February of 2026. The gold standard gave you the gold standard alert of we were going into an extended bear market. And you can see we've given away almost 100% of that Donald Trump induced pump, sitting down here at 14 cents, right? And we're just above the 14 cents. The weekly time frame, 200-day, we're well below that, which is sitting at about 21 cents, right where the 50-day moving average in the daily time frame is sitting at 12:01 in the afternoon on my lunchtime. We got to keep this live video moving along. And I noticed that people seem to like the live videos. Join Jabroni Killers. It helps these live videos. If you want to see more live videos once a day at minimum, become a member of Jabroni Killers. It gives me that keeps the lights on and gives me the ability to do the lives. So if you like the lives, show some love, support the page by becoming a Jabroni Killer member for as cheap as a cup of coffee a month at about $3 a month. But you can see the XRP or the XLM, excuse me. We could try, as we've just now, and it was a gold standard industry only callback where that big wick down was that liquidity pullback in October of 2025, where the altcoins went down 40 to 70% in a few hours. And then you had to pull back up, and that's why you had that wick. We told you we would come pull that liquidity pull. Now that we've hit that in XLM, this would be a great time where everyone is now loading up max short, max fear in the short term, that this would be a good time for a pullback to the upside and try to retest the daily time frame moving average sitting there in red at the 21 cents and the horizontal 200-day moving average in the weekly time frame in green. So we're going to watch that with the XLM. Can we come in and have a nice pullback to the upside when everyone thinks the downside in the short term is going to continue? But the gold standard believes long term, meaning next 3 to 6 months, we're going to have capitulation to the downside, right? And that's where the gold standard believes the short-term market cycle is going, because we believe we have more downside. The same thing as the Bitcoin chart. This is a 3-year long rising channel. And we all know with technical trading, a rising channel is a bullish continuation pattern, but a bearish reversal pattern at the top. And that's exactly what it's doing now. It's finally hit the top. And the technical target for this is the bottom of the wedge, down there around $27,000 and change. And the gold standard still believes that that is a highly possible area that we come back down to. But in the short term, we're going down to the 67,200. But we could be ready to have another little mini pump back to the upside, potentially up to the $85,000 level or slightly higher in the next 7 to 10 days, as everybody got mass bearish again after this most recent leg to the downside. But in the medium term, before you do anything phenomenally well to the upside, and this is why we do not trade leverage at the gold standard, we will come down to the $67,000. And then eventually we're coming down to the $51,000. And that would be a great area for a short-term reversal, right? Classic short-term reversal, just like if you look left a little bit, you had a nice pump and a consolidation there, right? These are where you're going, and potentially capitulation could drive you as low as $27,000. Does that mean it's going to happen? Absolutely not. But could it happen? Most definitely, right? And if we take a look at some of the news that I seen as we were scrolling along here, we can see Bitcoin ETF seeing a $562 million inflow after a $1.5 billion. That's right, $1.5 billion sell-off. So about half as many people came back into the market as flooded out last week. So that's a bearish signal as far as the gold standard is concerned in the immediate short term, right? Bitcoin exchange transfers funds. Spot Bitcoin ETF saw 562 million inflows, 1.5 billion outflows. Despite the uptick, analysts cautioned the ETF as broader markets are likely facing continued pressure from institutional selling and retail selling. The inflows came as Bitcoin rebounded below 75,000, but that's very bearish as far as the gold standard is concerned. And you can see the amount of outflows going on, the daily total net outflows, the 16th, 394 million, the 21st, 700 million, the 23rd, 103 million, the 26th, brief inflows of 6.84 million, the 27th quickly gave that all back at 147 million. Peaked out at the 29th of January of 817 million. And then you had inflows for one day. Finally, On the second, getting some life back in, people buying the dip, buying the brief bottom, buying what they conceive as a low, or averaging in, or buying for the first time, trying to swing trade or trying to catch a falling knife, as the gold standard believes. Like the channel, become a Jabroni Killer member. Most importantly, and there's no reason not to, it's for free. Go to the Retail Trader Facebook #1 page, and we'll be the #1 viewed and seen and followed in just a matter of a short few years. Vincenzo's Go Crypto Investing. Signing off here. Peace and love from the gold standard.